Good morning, everyone, or good afternoon, depending where you are in the world, of course. Welcome to the ETF BILD webinar series. I'm Justin Mize. I'm the founder of Buttonwood Communications Group. We're a financial services-focused PR firm based in New York, but that's just my day job. I moonlight as one of the co-founders of ETF BILD, along with Bib Strench, Rich Keary, and John Jacobs. We created ETF BILD in 2017 as a vehicle to encourage discussion in the industry on some of the more business side topics that sometimes get overlooked. I'll be your moderator today for a discussion. We're really excited about delivering investment and trading strategies through ETPs, a global view. We'll plan to go about 30 minutes of discussion, leaving time for some questions. Feel free to fire questions off through the chat feature. If they fit into the flow of the conversation, we'll take them on the fly. Otherwise, I'll end up saving them for the end. We have a terrific panel to educate us, whom I suspect many of you watching probably already know. I'm delighted to be joined by Nandini Sukumar, CEO of the World Federation of Exchanges, and Kirsten Wegner, CEO of the Index Industry Association. So I thought it might be nice if we just start off with each of you providing a little bit of your background and especially talking more about your organizations. As we were saying earlier, I think while your organization is probably known to many people in the audience, they may not fully appreciate all the things that you do. So maybe Nandini, if you'd like to kick us off.
Sure, and thank you very much for the invitation. We're delighted to join you. I've known many of you virtually around the table for so many years. So really a pleasure to be here speaking with you all on this virtual, in this virtual session. The WFE, the World Federation of Exchanges, represents both exchanges and CCPs, clearinghouses. We are the only global industry group for market infrastructure. We were founded in 1961. And we are, as you would imagine, as the name of the tin suggests, we represent market infrastructures from around the world. So we have about 250, and that translates to about 72 members. NASDAQ, who've been a member, for example, for many years, accounts for about 28 of those 250. But we also have ICE, CME Group, CBOE, TMX, and of course the DTCC and the Options Clearing Corp, so are all among our North American members. North America is one region. We actually call it the Americas because we have a rich hinterland with the Mexican exchange, with B3, the Brazilian infrastructure, as well members. We are headquartered in London. We have markets. We have markets and exchanges across the EMEA region, Europe, Middle East, and Africa, represented as well as in Asia. We have the usual diverse mix of market infrastructures. We have big, we have small, we have emerging, we have frontier, we have developed. We have them across asset class and across geography. So a little bit about us. We speak regularly on the topics that all of us care about. We find that there are typically universal themes, and the conversations that we have are particularly interesting because a conversation about an ETF in New York can be so different from a conversation about an ETF in Tokyo, for example. So with that, let me pass back to you, Justin.
Well, thank you, Nandini. That was great. Kirsten, over to you, please.
Great. Thank you, Justin. And I have to say, I'm a huge fan of ETF BILD. You produce such fascinating and fantastic content.
Thank you.
Nandini, I've been a big admirer of the World Federation of Exchanges over the years. You have a lot of overlapping members. So I'm Kirsten Wegner. I'm the new CEO of the Index Industry Association. Much like the World Federation of Exchanges, we have members globally in Europe, Asia, the North America region, and even Africa. So I'm about 1 month in, and it's been so exciting to meet my members. Many of them are exchanges with index divisions. We have NASDAQ, CBOE, ICE, and then we also have a number of other index providers that you'd recognize, just small companies like S&P Global, MSCI, London Stock Exchange, FTSE, and I won't even go over the whole list, but it's a really fascinating membership. And we're very much aligned on producing a global voice for the index industry. We have themes we really care about dearly, like democratizing access to investing, ensuring that we're shifting from a savings to investing mindset globally. And really, much of our 2025 initiative is just around education. What is an index? How does an index work? How do we support the ETF ecosystem? And this really important role of our industry collectively in supporting people's future financial security. So just thank you for having me on. This is going to be a great discussion.
Absolutely. Well,
Yeah.
go ahead,
So
Nandini.
if I can lead in, I think we should all, have a moment to congratulate Kirsten. I mean, it's amazing to have you on, 1
Thank
month
you.
in, so amazing and to hear from you. So, we wish you every success with the important organization that you lead.
Thank you so much, Nandini. It's really inspiring to see another female financial services CEO. And I know you've done just an amazing job with your leadership. So I hope we can meet up later and I can learn some lessons of what has worked for you in that role. So.
Well, and you both remind me, of course, it is Women's History Month. I don't know globally, but I know it is here in the US. And I know Saturday is actually International Women's Day. So this is kind of perfect timing that we have two female CEOs for this discussion. Maybe we can connect back to that on a different theme later. Wonderful. So I think global is the operative term here from both of you, and that is our global view is the title of this. Why don't we start, and maybe Kirsten, if you want to start us this time, what are the major global trends from your vantage point sitting at the Index Industry Association that affect your members, that affect the industry, the whole ecosystem that we're talking about?
Sure. I mean, I think it's obvious that we're at this state of global uncertainty politically. There's, I think, so much uncertainty out there, and that really fuels into investor uncertainty and end user uncertainty. If you look at the data of the polls, the people saving for their retirement or college or other life goals feel more anxious than ever. And I think there's a lot of political discussion right now about what future benefits people might receive, whether it's in the Medicare or Social Security space. So people really, at least in the US, and I think increasingly worldwide, are trying to claim more agency over their retirement security and their future of financial security. So I think with that in mind, big picture, we juxtapose that against increased retail investor participation still since the pandemic, I think double at the pre-pandemic levels. So I think it's really important to look at the role of indexes and index products in driving down that cost for investors. At the end of the day, people have more savings in their accounts as a result of this broader ETF index-based investing ecosystem. And so I think, as we look globally, it's really important to educate the public on what products are out there. And I think our members really are, looking to do that kind of education globally throughout the world. I think there's this shared anxiety about people's financial futures. So we're hoping to play an important role in educating on that.
Thanks, Kirsten. Nandini, over to you. Kind of same question. From where you're sitting, what are the major trends you're looking at for this year?
We're all waiting for spring. But when listening to Kirsten, we're all waiting for spring. But listening to Kirsten, I was really struck at how I suspect all global kind of organizations that, are in financial or capital markets are in some ways looking or thinking about the same things. And the first of which is, 2025 is a year where I think we probably just need all of us to educate people, re-educate people on what we do again. What is our purpose? What do we do for people, etc.? How can we support it? And how can we support you? And the reason for that is, 2024, it was an unprecedented year in terms of the number of elections, right? So pretty much, I think, it starts with it's 254 or something is the apocryphal number. But there's a lot of new government around the world. That's not necessarily a bad thing. It just means, though, that with new government, I think, and with new states who are thinking and are aligned in one common objective, which is how do they develop their economies, how do they improve the well-being of the citizens of that state, it's a good opportunity for us to come forward as an industry, especially the exchanges and the CCPs. We are the center of the center. We're the center of the capital markets. And if you consider capital markets the center of the economy, and the economy spreads out from there, the purpose of a vibrant and thriving economy is, to improve the lives of people. So really, for us, a big focus is just very much talking to people and educating people about our purpose and how we can help. And because that's really where we're all coming from, right? We want to be able to be supportive to the new government in various jurisdictions in terms of their aim. Earlier this year, it was in January, we published a paper, and it was a year-long, we do research, and it was a year-long effort. But this paper was for us, pretty pioneering in many ways, because we hear all the time about the role of finance in the economy and economic growth. And what we wanted to do was we really just wanted to quantify the role of stock exchanges in the first instance. And for all of us around this table virtually, and also on the webinar, we are nuanced. We know that there are stock exchanges, we have derivatives exchanges, there are commodity exchanges, etc. So we picked stock exchanges because that's the first and the easiest to recognize. And we had a good look, and we looked at, I think, 30 data over 2 decades, 20 years of data, and it was 37 countries. And we looked basically at the link between stock market development and economic growth. And the findings were really very, very interesting. And they were quantifiable. We found in the short term, we're looking at short-term analysis, that there is a two-way influence between economic output growth and the stock market capitalization in the short term, but only for high-income economies. And then secondly, low and middle income countries experience what my research team describe as a unidirectional relationship in the short term. So if you have a stock market capitalization which positively impacts economic growth, not vice versa. And looking at the long-term analysis, especially with larger countries, in high-income countries, such as, for example, the Americas, you have a 10% increase in stock market capitalization, which is positively correlated with a 0.045% rise in economic growth. And that's a big number if you're looking at US GDP. So that's, I think, big picture. That's one of the big kind of missions for us this year and the year beyond. But looking specifically at the ETF space, one fascinating thing which has been, receiving a lot of attention is the difference between the US and Europe, both big capital markets, both with many similar demographic themes. But in the US, we have what, 75% of ETFs? It's a very active market, 70 to 75%. ETFs, ETPs listed. And in Europe, that number is 30%. So all of us, in this virtual table, we need to, that gives us, that's our call to action, really. We should be leaning forward into that to try and make that gap narrower.
Yeah, that's great, Nandini. And yeah, it is remarkable too, back to the beginning of your comments about, I was looking for some data on this. I think Pew said 60 countries had elections last year. I saw other stats that 70 countries had elections last year. But interestingly, and we all know this, but just to set the table for the next question, I think people think of elections last year and they think change. Certainly people in the US and the UK might feel that way. But that wasn't necessarily the case all over the world. You had lots of different sort of outcomes. In some cases, parties stayed in power and there weren't necessarily huge changes. But again, for both of you, as you look at the regulatory regimes and the impact maybe of these elections on those regulatory regimes, what other things maybe you're looking at? I imagine this comes back to education as well. That probably creates even greater need. I think you alluded to that, Nandini. So how do you view the regulatory regimes and possible change, and what does that mean for your members and what your organizations are doing for this coming year? And maybe I think Nandini, you should start this time. I think I'm back to you.
I can start again. Okay.
Yeah. Oh, did okay. I'll get it right.
No, it's no problem at all. Well, I think the immediate response to that is, it's still early days. Let's see where we land. I think we're still in most jurisdictions, while a lot has been signaled, we're still in the early days of actually seeing some of those decisions come through, and some of the dust settle, if you like, that will help us understand where the impact is going to be. I think for an exchange, the exchanges all the time navigate political change. We're not political organizations, but we live just downstream of it because, the finance, especially in some of, the smaller markets or in emerging and frontier markets, the phone will ring and it'll be the finance ministry on the line all the time. So really, regardless of what impact and where that impact is in regulatory nexus or regulatory focus or even regulatory preference, the role of the exchange, the mandate of our members is to help navigate that impact, that change for everyone, and to work constructively, supportively with government everywhere to ensure that they are getting what they need from their exchange, from the exchanges in their jurisdiction. So I think I would say that like a really good example is every exchange has a complex web of stakeholders. We support the issuers, we support the regulators, we speak to we speak to the buy side, we speak to the sell side, academics want to talk to us. So at any given moment, because and I live that here, if you look at our stakeholder mapping, they go in every direction. But where we really are all wanting to lean in is we just want to ensure that whatever the impact, wherever that change is coming, that it's positive change for the investor, that it's positive change for the market, and that it's positive change that leads to economic growth for everyone. Because we, as an exchange, will work with every jurisdiction, every stakeholder, every government to help them achieve their aims.
That's great.
Great.
Thank you. Yeah, Kirsten, please go ahead.
I would echo what Nandini said. I mean, our organization also is very much aligned. And so we're an educational resource of data, information with an open door policy to regulators globally. So if a regulator wants to learn about the index industry, we are more than happy to be that education resource. And much like Nandini said, we are not picking one political party or one government. We are here to be a resource for everyone, really. And with that kind of bipartisan spirit in mind, I mean, if we're looking at the global, regulatory outlook, I think that at least, in the US, we have a new SEC chair. I think his confirmation hearing is kind of underway over the past week. But, historically, he is very in support of policies that promote investor diversification and reduction of costs and competition. So I expect that kind of agenda to continue given his background. I think there's going to be a continued emphasis on market-driven solutions and investor choice. So I think that is going to be reflected in the U.S. Regulatory environment. It is very different, maybe in Europe or in Asia Pacific. I think there are new markets of expansion for the index industry where regulators have been looking at the products and are, I think South Africa right now is looking at what the European framework is for benchmarks. And so I think there's a lot of opportunity for IA to educate those regulators. So, as there's benchmark regulation in Europe that doesn't exist in the US. So we're navigating many different regulatory climates, but are always happy to be that resource to the regulators.
Well, and Kirsten, staying on that theme, I guess, with you for a moment, as we, again, sort of the broader question is sort of what are indexers facing this year, but more specifically, we just went through a period where I think the index industry was expecting regulation here in the U.S. You were just alluding to, maybe could you expand on, I think the question we get a lot is,
I don't know that anyone was expecting regulation. We have already have a lot of transparency with IOSCO, and many of our member firms are already regulated by the SEC within their other frameworks as exchanges. I think that there's always, I'd say, education opportunities for room for improvement, and so I don't really see. I haven't seen like a strong bipartisan push for heightened regulation, but I think there's always discussion within factions of political parties on different potential, I'd say, opportunities to fine tune things, but I don't see any real push for a different regulatory framework in the US this year, at least.
Got it. Well, and then sort of the finishing that question a little bit too, what do you see as some of the big topics or issues for the index industry over the next year, 18 months?
Well, I think that innovation is going to be a big topic. When we look at the different variety of indexes that are out there and the idea of consumer choice, at least in the US. I think there's a very different framework for ESG of what's kind of in favor now with European regulators as opposed to the US. So I think there's a bigger push for ESG in Europe. And I think in the US, there's a push for kind of consumer choice. And you can see that reflected in some of the Financial Services Committee, I'd say like agenda items where people are looking at making sure you have products that align with different choices for investors and giving consumers the choice of what type of products they want to invest in. And that could be anything from new technologies like the AI industries or other industries. I think there are even religious indexes. There are vice indexes. There's ESG indexes. So there are many different types of products available to consumers to choose from.
And Nandini, kind of a similar question, I guess, from the exchange world. What are some of the either sort of top issues or maybe innovative projects underway? What are some of the things happening in your world for the next 12, 18 months that we should know about?
Well, actually, thinking about that question, I think I'll actually bring it back to ETFs. Because we're all here, celebrating ETFs. I think that there's really very interesting products and conversations and thinking conceptually around actively managed ETFs. Of course, we're also seeing ETFs in the digital space, NYSE, NASDAQ, the Toronto Stock Exchange, all of them looking in that space. VCMs, voluntary carbon markets, ESG, ETFs. We published a paper yesterday, actually, in which we analyzed the market design and structure of existing VCMs, because we're at the start of a journey, but that is a new public market. We don't see them that often, but we are we're fortunate to be at the birth of a new public market that will run and grow over the next decade. So I think that whole story. Of course, we have one of the things that we've been working on a lot at WFE over the last 18 months has been some mid-tier markets coming to the end, to the conclusion of what are sometimes 10-year projects, to build a new derivatives market. So one very exciting example is in Casablanca, the Casablanca Stock Exchange. They spent 10 years working on a new derivatives market. It's a big, government going back to the point, state-backed project. The regulators involved, the exchange has been involved, and they've got to the point where they're going to press the button and they're going to go live. And that's only going to be the third derivatives market in Africa, the whole continent. So you're seeing that and initiatives like that in markets that potentially one day will grow large. It's a very exciting time, I feel, in terms of the birth of some of those new markets.
Yeah, that's great. It's really a great setup for our next topic too. When we think about kind of, again, back to our global view theme, I guess, but what are some of the advantages of the continued rise of the interconnectedness of the exchanges and the world of indexing and data providers? And maybe, Nandini, we'll stay with you on this one.
Me? Okay.
Yeah, sorry. Yeah, please.
Okay, no, it's fine now. Well, actually, it's interesting. Is interconnectedness still continuing to rise? And I pose that as a question to both of you, my esteemed, speakers on the panel, because I think sometimes when I'm sitting here in London, post-Brexit, etc., it just feels like we've had 20 years or plus of pulling toward, having greater interconnectedness or of striving to be more global. And then in the last, I want to say 4 or 5 years, it just feels like there's been a decoupling of that, that markets, that jurisdictions have been looking almost more inward. There's been an increase in regionalism, and then in terms of a focus on national markets, where, in the past, the number one, the topic of conversation when you sat down at dinner at a conference would be, oh, well, capital flows, global capital flows. Whereas now I think people are as likely to speak about, bankruptcy laws, national, jurisdictions. If I do business in this market, how am I subject? How many different regulatory regimes am I subject to? So it just kind of feels like the mood is a little different. Having said that, I would say that we're still, interconnectedness is probably still continuing to rise, albeit at a slower pace. And if you look at interconnectedness, which for me somehow feels like it's such an unfashionable word. It has sometimes pejorative implications, like, it's unstable, but being linked or being global has just so many proved benefits, right? If you look at it in terms of expansion, you find growth in your own market, but also abroad through, in foreign markets, and by being global, by being interconnected, you have as an investor greater choice of product, look at cross listings, etc., and all the benefits that has flowed through. Look at liquidity and the virtuous impact on liquidity that being global is. Look at capital flows. Look at the ability, specifically in the ETF space. Thinking about this panel, we were having in the WFE office a somewhat lighthearted conversation about how is there a coffee ETF? An ETF that gives you exposure to companies that either sell or grow coffee across the world. And in the past, in a domestic world, or in a smaller, narrower world, you would have exposure maybe to only one market. But now maybe the countries where the rate of coffee consumption is growing fastest are actually in Asia, where traditionally some of them have been tea drinkers. So interconnectedness, if you like, gives you exposure to that growth in a different market, and gives you, again, that greater breadth of choice. So I'd be keen to hear what you all think.
Yeah, that's great.
Yeah.
Please, Kirsten, go ahead.
There are several coffee indexes and ETFs. I just looked, so that can be the topic of our next show, Justin. I can drink coffee and talk about coffee ETFs. But look, I agree with Nandini that it's certainly, if you take on the face the political climate right now, the interconnectedness seems to be something we might look upon nostalgically from a messaging standpoint when you read the headlines about tariffs and other political messages. But I think from a corporate strategy perspective, I think that most global corporations are excited to expand their geographic reach. And that includes the index and ETF industry, right? There's tremendous opportunity for growth, for market growth in areas where there's lower participation. And I think that the benefit there is those global companies can leverage their resources and create new jobs and opportunities for those local areas that have been underrepresented. So, I think I draw a distinction from what we see, the political messaging, and then kind of business strategy, right? And I think, the question then is do businesses want to expand to regions where there might be hostility to global investment? That's a separate question too, right? If there's so much instability in a country and uncertainty, do people still want to do business there? And you have to balance that versus the alpha of the growth there. So, there are many geopolitical questions we may not have had on the table years before that have entered probably and factored into business decisions. On your question of interconnectedness,
I think that's a great point, really, that you've made there, Kirsten, about how there are things that we are talking about now that we consider as part of daily business conversations, which even 2.5 years ago, when we just didn't think about it.
Yeah. But another area of regulatory, interconnectedness, you see regulators inspired by other regulators. So I look at, in many different aspects, the US and EU regulators would like to be the leaders and image example setters for various regulations, right? And that is definitely happening in this industry as well, where if you're in a geography, maybe in Africa, where you don't have a regulatory regime on a product, you might look to what the framework is in the EU and what the different framework is in the US, and be informed in an interconnected fashion by that structure. So I think having organizations like the World Federation of Exchanges and Index Industry Association is important, because you can't look at any regulation anymore through just one geographic silo. We really do have to look internationally and globally, because what happens in one country ultimately does impact other countries, not just from the standpoint of the firms regulated, but also other regulators maybe mirroring or echoing what other regimes do. So
you're absolutely right, actually. For us at the WFE, almost the top ask in all our conversations with either members or stakeholders is, how do they do it in, this jurisdiction over here? How do other people do it? So I think that I had not considered, interconnectedness in terms of regulatory approaches, but you're absolutely so right. And the reason that I remember Bill Brodsky, who
Yeah.
was chairman of the WFE and really is a great leader. One of the many seminal things he once said to me was he was addressing our working committee, our group, where our technical experts sit. And he said, for me, that the best thing about being part of WFE or a global organization is that I can come here and I can ask all of you, my peers around the table, how did you do this? How, and I know that if I had, an issue that I had a problem to resolve in terms of a structure or a framework or how you designed a market, there would be somebody around the table in a different country, in a different jurisdiction, who might have experience with it and would talk me through how some of those things happen. So it is so true. We have become accustomed to, in a regulatory sense, trying to use examples from around the world to ensure that we're delivering the best fit, the best market design for each individual domestic market.
And a funny thing is, if you ever travel, you'll see each country has themselves on the center of a map. This is an analogy to you. You go to the US, we're in the middle, to Europe, they're in the middle, China, they're in the middle. We all do look at ourselves where we are geographically from our own vantage point, right? And I think analogously, if you hear the rhetoric of regulators around the world, like every regulator wants to claim themselves as like the global leader in this area. It's certainly something I hear over the years echoed in the US and Europe too. So I think it's not really a competition to be the first to regulate, but to be the kind of best regulator, most exemplary one that others would want to mirror. And so that is something I'm mindful of when you're leading a global organization, that, everyone does want to have the best regulation. And there is, this mirroring of one another. And at the same time, we're all looking at it through our own lens. So it is really an exciting opportunity to be part of a global organization.
So one of the things that we say quite often, and I always think it's a cliche, but it's so true that I can't help using it time and time again as a phrase, is we talk about no one size fits all.
Yeah.
And over the years, I've tried really hard to find another phrase to say the same thing, and mostly failed. But the no one size fits all, every market needs to be designed for the nuances of its own investor base, its own needs, so that it services the economy, that it is at the heart of. But in that bespoke, customized approach to market design and market structure, everybody does look at regulatory frameworks, what has worked, what hasn't, in other markets. One of the most popular sessions we ever did at WFE in one of our internal technical committee meetings was a couple of years ago, when we were talking about SME markets, right? And, for the ETF industry, SMEs are an interesting topic. How do you get SMEs to list? How can we get them, mobilized, etc.? Why is so much concentrated in the top 10, 20, 100 stocks in your country? And we had a member who said, you know what, we have a really successful SME market. We're happy to present, a case study of what we did. And everyone was like, oh, okay, yay. And then, very interestingly, we had another member sitting next to them who said, actually, we don't think we've been successful at all with our SME market, so we're happy to present what we think did wrong. And there was a huge audience. It was well before COVID. It wasn't a virtual meeting. People got together in a room to think about, what had gone right in one jurisdiction, what could have been improved in another jurisdiction, etc. And I always look now at all the SME market refinements that we see, and have seen since that session, and kind of have this mental quiet silent chair going, yes, that all came out of that one session where someone was prepared to talk about what could be improved, and one member was prepared to present on what they think was their secret sauce.
That's great. I'm looking at the time here. we're kind of moving into the Q&A portion. So I'm actually amazed none of us has brought up AI yet, because I don't think there's been a conversation in the industry for 6 months that didn't include AI. Maybe Kirsten, I'll throw it to you first. On the index side, any thoughts on AI, what that means for the future of the industry, or what some of the trends or innovations are that you're seeing?
Sure. I mean,
So,
and then I think secondly, there's a lot of curiosity from reporters I get over what, if any, AI might be used into the calculations that go into comprising an index. And I think that's a very interesting, question that our organization is looking forward to publishing reports and studies on. We have, a broad membership that may be using this technology in different ways. But look, I think it's a huge, more broadly, if you step aside, the U.S. Congress is interested in AI. The Commodities Future Trading Commission held an AI day earlier last year that I testified in as a witness on behalf of my previous organization. And I think, from the regulatory perspective, at least in the US, regulators are curious about accountability when you go into designing an AI system. Are you designing it internally within an organization, using a third-party vendor? And does the existing legal framework apply to AI? And I'd say I interviewed a really interesting barrister in London about AI regulation. And he, there's so many different frameworks globally, but he was going into, well, should AI systems have their own legal rights if they have human consciousness equating to humans? Like, should they be able to sue us for contract or negligence, breaches? So I know I'm going past your question, but I think AI opens up its own fascinating kind of can of worms that is really interesting from a perspective as a lawyer and a regulator. The extent to are actually using AI, I can't really answer, but I can say there are many more questions than answers for me when you look at the regulation of AI more broadly. It's just a fascinating topic.
yeah. And Nandini, off of what Kirsten said, do we have to worry that AI is going to take over markets in the future?
It's very interesting because there's a lot of AI already in markets today, right? And if you think about the increasing electronization of markets over the last 15 years that all of us have lived, some of that, it can be equated as AI. I think where we sit at the WFE, a couple of kind of broad themes. The first of which is every one of our members is looking at how they can use an AI to improve the effectiveness of their market, to enable their market, to be able to do things that are now being done manually to make it more efficient, right? So everyone's looking at AI. For the exchanges, for just the reason that you mentioned, Justin, AI is complex, right? How can the computers are running the market, you can't ever be in a place where you will fully be able to be AI dependent. So the question needs to be, what is the appropriate balance? Where is AI, a virtue, and where is it perhaps more of a risk? And how do you manage both the innovation that AI is bringing, but also, and it's such a boring word, but how do you manage the risk that AI brings? And nobody, with all these conversations, not only AI, but even with digital assets, nobody ever wants to talk about things like risk, market integrity, managing, good governance, all that sort of stuff. These are just such old-fashioned terms, it feels like. But we do need to think about them, as we kind of harness innovation, to improve the markets that Kirsten's members and ours operate and work in. We need to get that balance right. And I think that, I agree with you, there is no conversation that I've been in the last 6 months where AI hasn't cropped up. AI exists already in very clearly defined areas in the markets already, and is working effectively. So the question is, can it really deliver? And at what point will people feel comfortable? An abiding theme that we come back to in the market infrastructure space is, the ability or the existence of the so-called kill switch, right? That the ability that at the end of the day, something happens, you want to be, someone somewhere needs to be able to throw a switch and it all stops. Will we ever be able to trust that kill switch to AI? I don't know is the answer. As
Yeah.
Kirsten said.
And
Yeah.
I'll speak on my own opinion here. Obviously, this is not really within IA's purview, but as myself, the kill switch is something I've brought up actually at congressional hearings. I've testified at AI in the past because I think on one hand, AI is like really nothing new. It's been around for at least 50 years, and we've already seen a vast automation of the market. And I think it's functionally has been used for a long while as far as pattern recognition. It's being used by exchanges for detecting anomalous patterns for maybe fraud or cyber risk. So from the defensive side, it's very helpful, right, in mitigating risk and detecting anomalous patterns. But when you get to the next step of beyond just quote unquote AI as the first phase of pattern recognition and autonomous AI, we're not quite there yet, like the sentient self. The next phase, we don't know how far away we are from that, right? And that's where it kind of does get interesting. And I think a core takeaway is that you always need a human co-pilot. You do need someone to be able to turn an off switch off. We've learned from market structure discussions over the decades of the importance of having a kill switch if there's an event, or think about circuit breakers when algos go wild, right? So we do need, I think, to learn from those lessons, and the financial services ecosystem has been maybe at the forefront of some of these innovations that people call, AI, like pattern recognition. We've been using that in the financial services industry for a while. We know we need a kill switch. We know we need a co-pilot to be able to turn things off. And it's like any other technology. If you have an iPhone or a computer, sometimes things glitch, right? Technology is not impervious to failure. And so I think when we look at use of AI in a financial services context, like we have to have some common sense. Yeah, things can go wrong too. And one needs to be able to have a kill switch, as Nandini said. It seems like such an obvious point, but many people don't think about it. And I think it is an important point to make.
So when we thinking about what happens when markets are in moments of systemic stress, right?
Yeah.
And the reality is we really don't want to be there, but they come at, let's say, every once in a decade. There's some systemic event, and there is the fear, as in the fear in Read analogy, we see the fear. And what do exchange markets do? Pretty much, like a lot of they'll switch off the black box. It'll go into a much more managed, human managed mode, etc. Right now, when you Google, have you noticed that your first page now is AI generated? And I was like, wow, so, but what you learn very quickly is you can't rely on that. You have to go back and check before you take an action based on what
Yeah.
that AI generated, search does for you. And on really quite simple things like buying a train ticket, right? Like, can I buy a train ticket from X to B, A to Y, A to B? And the AI says yes, but then you rock up at the train station
Yeah.
and you realize you can't. So you learn to check. And when you're operating a market, you don't have that luxury, of rocking up at the train station and being like, oh, actually, it doesn't work. So there will always be that sense of responsibility that you need to have when you're operating important infrastructure like an index or like a market. So it's fascinating. I'm looking forward to seeing, all the cool things that AI will bring us and do for us. I live in London, where we already have, the Docklands Light Railway. Back in 2000, they brought in driverless trains, right? But once in a way, like actually more often than not, you'll find somebody on the train as well, with a man, and it might be just that it's a particularly busy time in the commuter day or something, but they have somebody on, because when you're running a train full of computers, you do need to have, as Kirsten so eloquently put it, a human co-pilot.
Yeah. And I would add to what you said, right, about having the Google search have the AI item at the top, right? That points to the question, right? Like, the AI system is only good as the data input going into it. And I think
That's right.
many people, I'd say, forget that, right? Like I think of the AI system as the plumbing, and then the data going into it is the natural resource. And I think that's why we're seeing, heightened scrutiny, or attention to the value of data, right? And so, because whoever has the best data set is going to have the best AI input, right? And I think generally, yeah, I think data is going to be a big issue in the next coming years, because we've kind of looked at our focus on the AI, but it's really the data that's, in many contexts, like if you're searching Google and only 3 data points show up at the top, well, you're going to have a skewed, or if there's a company that's sponsoring the data that goes to the top, you're not going to have a full response from the Chat GPT auto-generated one. So, but I do think when you look at systemic, like have the markets function as intended, like you mentioned, there's been a crisis maybe every 10 years, right? I think we can have a lot of confidence that the stock market worked as intended during the most recent crisis, during the pandemic. Look, we had the market off, we had the kill switches going at the right time, despite this like global catastrophe that happened in 2020. The markets, I think we had a lot of confidence in the markets. All the infrastructure we built up worked as intended. And so that was kind of a great test of all the improvements we've made to market structure globally. And it built, at least instilled me with a lot of confidence that the markets were working quite well based on that experiment, even with all the automation. So that was a pleasant takeaway.
It is, and thank you, Kirsten. If I could just say, one of the things that I personally always find fascinating is that obviously, the COVID stress, and the way that all markets went remote, people were able to operate all those things from, their garages, etc. The human home office. It gave us all a different perspective. Everyone looked at their, at their backdrops now for their home office. But I find it so fascinating that the reason things worked well is people had exchanges and others had spent a lot of money and resource and time and thinking about it over the decade that we had the last crisis, right? So it worked well because people were prepared, invested, committed, and had done their homework and their hard work. So I just find it personally very fascinating that we've gone straight from that into a conversation about AI, not straight, but pretty much straight, from a conversation about AI and how it's going to, take over the world. And the question we need to ask ourselves is, at what point would we feel comfortable AI, operating all of those markets remotely in the way that we were during the pandemic? And when we can say, and I say we in a collective sense, industry, ecosystem, stakeholder, government, regulator, etc., when we can say we are ready for that, when we are comfortable with that, then we know that we are aware, that is that we have matured in AI.
Yeah, I would posture that we always had, humans as co-pilots of the systems when we were working remotely, and that we always, I would argue, should have a human co-pilot, but that we can use the technology to leverage efficiency, cost savings, and I think to, just like when you have an airplane that's being flown with a human co-pilot, but I'd rather have an airplane with an AI system navigating through turbulence or clouds, right? If there's a turbulence, I'd actually feel more comfortable being a human, have a AI co-pilot than not. So I think we have to posture it as a net advantage for consumers, that I don't think we ever want to automate away all the jobs. We're always going to want people as a co-pilot, but having this fantastic technology there to help us feel more safe and secure, and where we know there's a kill switch, and where we know we can maybe make it more efficient, that we have that technology in place. It makes me sleep better at the end of the day, because I think Justin, that was one of your questions, like what keeps you up at night.
That's how we
as a consumer, I feel better knowing there is sophisticated technology there, and in the same way I feel better as a consumer if I have an ETF paired to an index. I sleep better knowing that there's an independent and fully transparent, mathematical formula creating that index, that I can, whether it's based on AI or not, that it's precise and transparent, that I can have that to know that this has been configured in the right way, right? But the same with AI, like in the markets more broadly, right? I want the technology to work for me, to make it more safe and secure, more cost efficient, but I would never want the human taken out of that, because I think it is important to see the technology as a tool for a human rather than a full replacement. And that being said, I'm a very big AI proponent, so I don't mean to be putting the brakes on AI, but I think it is really exciting, and we want a human co-pilot in the mix.
I think that's a great, summation of where that's very sensible. It's a very sensible conclusion. And I think, with AI, there is so much that we can benefit from, right? We still live in many parts of the market in a manual world, and anytime there's anything that's manual, it's expensive. So if AI can take, out some of that, but the reality is, most of the manual functions have been automated now. Going back to the point that we both made, that the last 20 years, electronification of markets, the automation of markets, have taken us there already.
That's great. Actually, we question in from the group. Can you talk about trends in costs for both data and regulations? That's the biggest roadblock in running a financial services firm, and excuse me, and even can become a barrier for entry to grow a business. So the question, can you talk about trends in costs for both data and regulations, how that's affecting businesses?
Well, I will say personally, I think that's been the most contentious issue I've witnessed, over the past decade or two. And if you're a regulator or let's say a lawmaker in the US, it's very hard to pick a side on that because your constituents are divided amongst kind of exchanges and brokers, and you want to make the whole ecosystem happy. So I think there has to be some sort of like free market answer to that. I can't answer directly on behalf of IA, but I do think, I think I will acknowledge it's probably it's one of the biggest issues of this decade.
Yes, I mean, I can answer on behalf of my members, the exchanges, who have spent in the same way that they've spent, the last decades investing in markets, that they are resilient and stable. When we swung out during COVID, they have spent the last decades investing in data, cleaning up data, building better quality data. The data that you see today that everyone argues is too expensive, that everyone argues they own, it is a joint product. It's a product created equally by the exchange that invests, cleans up, thinks about, spends a lot of time and effort on. In some ways, the data conversation is relatively simple. It just says, someone's making too much money and we think that money ought to come to us, in here. And I think that as an industry, I think we really do need, you talked a lot about, and I was tempted to come in on it when you said that, you at the end of the day, you're only as good as the data you put in. And I would say that's absolutely the case, And so the effort, the time, the money, all of these things that the exchange invests in producing that good quality data for the market does need to be recognized. I think that whichever way you look at it, an exchange, a stock exchange, they are characterized by non-discriminatory access, and they have high standards of oversight, transparency, governance, and disclosure, all of which come at some cost. And on the other hand, there is kind of this discussion in which people say that try to portray data not as a joint product, but as belonging to one individual party. And it's not. It's a joint product. You can get free data in lots of places. The WFE website is one of them. You're all welcome to the free data. People are fed, most welcome to the free data on the WFE website. Except it's not even free, because the WFE spends time, effort, money. We spend quite a lot of our money. We're a small not-for-profit. We spend money cleaning up that data that our members provide for free to the industry, to anyone who wants, and it's available for anyone who wants it on the website. And there is a cost that our industry, the exchanges have absorbed in producing that free data.
That's great. And I get the clock. I mean,
Glad this is virtual.
I mean, yeah. And I would add in, so we're going to see this value of data be, again, I think the most foundational issue for AI more broadly. And I think that other industries can look to data monetization of financial services as a kind of illustrative of conversations to be had in AI more generally, right? To your point over ownership of data and you're seeing it in the AI world already. Like if you're building an AI app for agriculture, you have to buy agriculture AI. And they're different private vendors that are building it, then they're the university vendors. And if you're building an AI system, you have to measure the quality of the data, which Nandini mentions is not free, right? So if you get a vast and broad data set, like let's say outside of financial services, and it's poor quality, well, your AI output or incomplete, your AI system is going to have a bad result, right? So it's obvious that there are going to be some data produced that are going to be more expensive than others because it's been made to a certain standard of quality. And then you as an entrepreneur building your AI system have to decide like which source am I going to use, and can I, there are just many different models out there more broadly in the AI world. And I think it's a really exciting time, and anyone here has obviously been involved in the financial services ecosystem, but I think everyone here has skills and knowledge gleaned from our experience with data and financial services that is a very transferable skill outside to other contexts with increased demand for data in AI. So and Nandini, I agree with your comment. It's not produced for free. So, it's just valuing the data and the process that goes into it is going to be, I think in other contexts, an open question that's going to be hotly debated.
I think in some ways, because the exchanges in many ways, they are, they still act with such kind of social purpose in many aspects of their work. They are utilities still. There is somehow this belief that, well, if there's any part of the business or the organization, where there is some revenue being generated, where money is being made, somehow it becomes attractive to bring it over here to another part of the ecosystem. And everyone, I mean, it's a difficult one to address, because if you're an exchange, you're not going to be able to come. It's a difficult conversation with your customer.
Yeah.
But the reality is, it's not. It's a joint product. The exchange creates that product.
Great. Just a couple minutes left. Maybe we'll wrap up. And Kirsten, you already alluded to it, and I have to give credit where credit's due. The "what keeps you up at night" question is actually a favorite of our mutual colleague John Jacobs to finish these kinds of conversations. But right now, I think on my mind is AI piloted planes.
Well, I know, Justin, that you have a pilot license. I threw that in there as an extra.
Oh, thank you.
I mean, I wish I could be so, I wish I could say there's nothing that keeps me up night,
Right,
but I think right now, I am curious to see how all the geopolitical uncertainties plays out. I know, and it does impact the financial markets. I won't say it's keeping me up at night, but I think some of the contentious politics right now is something I am thinking quite a bit about. So I'll leave it at that.
Yeah.
So for me, actually, I'm going to go back, if I may, to a comment I made earlier, which is one of the things that I'm concerned about, with innovation is that sometimes we lose sight of what's important, and what is important. And in the midst of innovation, you still need to have markets that have integrity, that enshrine investor protection, that are accountable, all those things that are transparent, So I just wish that as we keep plugging away with new products, new markets, with, new asset classes, we cannot lose sight of the fact that you need, whatever the market, right? Whatever the market, whether it's an exchange traded market, whether it's not an exchange traded market, your market needs to have integrity.
Yeah.
We need to have markets that we can trust, that are honorable. And these are old-fashioned terms. So it feels like nobody wants to talk about it anymore. Everyone wants to talk about innovation and, all the new asset classes that are coming on board, etc. And that's great. I'm all for innovation. I'm happy. I think that the digital asset conversation has brought a new generation of investors to our market who otherwise may have been, felt disillusioned by Wall Street, and they have come back, the retail investor. These are good things for markets. But what's important is that the markets that they trade in, any market, exchange traded markets, what you're getting more or less, right? And that's not an accident. But what keeps me up at night is this kind of throwing the baby out with the bathwater, In the midst of innovation, you still have to remember what's important, what's fundamental to a market. And that's true also if you think about, some of the conversation, if you look at private markets and public markets, they're complementary. But right now, the regulatory incentives are all stacked in favor of private markets. How are you going to improve the health of the ecosystem, the health of the financial market ecosystem, if you're not incentivizing, mobilizing, empowering, nurturing, developing your public markets? And that's true of the biggest markets as it is of the smallest. In some ways, in the smallest and the emerging markets, they're more aware of that, right? But you have markets like in America, which are the envy of the rest of the world. And if I had one plea, it would be, look after your public markets, use your public markets. Where are you going to go for that price, that reference price, that everything else flows from? Where are you going to find the transparency, the accountability, the neutrality that you have in public markets? So we still need to fly the flag, keep up the good fight for public markets.
And I want to echo that, just the integrity of the displayed quote. I think it's really important that there's enough trading on exchange. I've read a lot about off-exchange trading, and just to make sure there's enough integrity of the displayed quote, because you're right, there's a valuable role of exchanges as innovative themselves and providing that transparency for investors. So couldn't agree enough.
I think we're going to have to leave it there. This has been a fantastic and valuable conversation. I want to thank you both again on behalf of everybody who's tuned in and is going to be watching this when we archive it. And on behalf of my ETF BILD colleagues as well, thank you so much for your time on this. Really appreciate it. And also thanks to Thompson Hine, who's been a great partner for ETF BILD as our host for this webinar series. So thank you all.